Hey guys, welcome to another video and thanks for clicking on this one. In this video, I really want to share something that I believe that can help someone out there, and that is understanding that starting is always the most difficult place you can be. Trying to figure out when to start, how to start, what you need to start, all those things can prevent you from starting. And that is what I want to address to you in this video, and that is you need to start to know a lot of things. A lot of times we want to know all those things before we get started, when the best thing is actually to start first and then figure it out. When it comes to investing, all right, one of the things that will stop a lot of people from starting is the fact that they feel like it's too complicated. They feel like they don't know where to start, what stock should they invest in, how should they even go about it. And all those things are things that all you really need to do is to sign up on an app and put in your information, put in a little bit of money, and just buy your favorite stock. Just start like that. Just buy your favorite stock, Apple, Nvidia, Microsoft, whatever that is. Just buy it and see how it works. Understand when it goes up, when it goes down. Deal with the emotions that you would experience just because of the fact that you feel like, man, I've just lost money. And then, oh, well, I've made money. Deal with those emotions. Understand those emotions first, because one of the worst things that will get any investor is your emotions, all right? And if you cannot master your emotions, you're likely going to lose money over time. Hence the reason why it is important to even get started before you try to figure out the complexities of different type of assets, whether it's options, whether it's bonds, whether it's real estate, whatever that is. Start with the one that you can do with your phone. Today, the stock market is up. The Dow is up about 200 points. We saw a swing in the morning where it started, a little bit on the level side, and then we saw it sell off because, well, somebody came out and said that President Trump is likely going to fire Jerome Powell, the president of the Federal Reserve. And he came out to say that he didn't actually say that, and he has no intentions of firing him. So that definitely, shook the market today. The other thing that came out today was the PPI, or Producer Price Index, PPI, and that number came in as expected. So it didn't really change anything with the market as well. And all of that to say, we can always be worried about the fears of what can happen tomorrow, and that will prevent us from putting our money into the market, when in reality, starting is really what can get us into making money. If you don't get into the market, if you're not in the market, you're not going to make money. It's as simple as that. The other thing I want to share with you, we know that inflation right now is at a point where somewhat it increased from, based on the CPI report. It wasn't too crazy, but we still know that we're expecting some numbers to come out in the coming, weeks. When I say numbers, I'm talking about these trade deals that have been made. And the expectation is, as long as these trade deals do not favor, the U.S., if the U.S. continues to push the tariffs higher, then there's a chance that we would have to pay more for these goods and services. And yes, even though inflation seems to be somewhat under control, the fact that it's going up is a bit worrisome, which means if this rest of the tariffs come into effect, things are likely going to go higher. Right now, inflation is around 2.7 or 2.9, depending on the core CPI or the CPI information that you look at. And if this continues with the tariffs, well, there's a chance that we would see higher inflation in data in the near future, which means that the interest rates are not likely to come down, and your borrowing power, is diminished, or at least your ability to borrow is not there, because if you have to pay high interest mortgages or interest on your credit cards, then that's not good for the consumers. Now, one of the things that we can do is to control what we spend our money on, where we put our money into. You cannot keep saving money and not put your money into investments. It is important that your money is invested in things that can hopefully outpace outpace inflation. And if your money is sitting in the savings accounts, especially these traditional banks, there's a chance that you won't make as much money in the near term or even in the future. Why? Because they pay what, 0.0% or 0.01% on their interest when inflation is also cutting into your hitting into the money that you've saved. So if inflation is around 3%, well, guess what? You're losing 3% to inflation on what you make at the end of the year. So all of that to say, I just want to encourage you to know that this environment we are in is going to be a bit tricky. We do have some more tariffs and trade deals that are ongoing, and we don't know how all of this will pan out. But one thing that we are looking out for is deadline of August 1st for most of these countries to come to the table and strike a deal. Hopefully, they can work things out between now and then. Otherwise, if they keep coming out with more tariffs or higher tariffs, then that is not good for the stock market. One other thing, if you are new to investing and you're worried about what is going on, I would say do not worry. The goal is to look at this long term. We are not trying to trade for today. The goal is to invest and build this income or this investment for the future, not for today. I just wanted to share all of this with you. I hope you found value in this one. If you have, don't forget to drop a like on the video, and I'll see you in a future one.